Hey traders, my name is Mark Owen, founder of Trade and Train, and it's the 3rd of December, 8:43 here in the UK. After Monday's movers, hopefully you've all made a lot of pips and a lot of profit thanks to some of the trade ideas sent out yesterday. Just going to start with Aussie Swiss, one of the charts covered. This really has just been printing the pips for us this last week or so. It's been operating within a correction pattern, but it's been going back up to resistance and coming back down, back up to resistance, coming back down. So one of the trades we shouted out yesterday was literally taking it from 67.88, and targets were down here at 67, just under the structure point at 67.10. Now what you will have seen is price has broken the structure point. It's had a clear break and closed below. Now we're in a retracement right now back up towards structure, so there's potential for another trade here on Aussie Swiss at some point tomorrow. I wouldn't bother putting anything in right now, but we'll be looking for a retest of this ascending trend line of the rising wedge pattern, and then we can look to trade it back down towards the 67 even handle number. So those that watched our Monday movers should have been looking at shorts somewhere up here and targeting the 67.60 area at the bottom of this rising wedge. Now we've seen it clean close below, followed by a lower close, and we'll be looking for a market retracement back up into this area. Another market of interest to us was dollar yen. I'm just going to remove all these drawing tools right now. It's just looking a little bit cluttered. So something we discussed yesterday was how the market, as it came from here, we had a big impulse down, and then through the evening session, which was discussed live in our webinar, and all our traders have capitalized on it overnight and through today, was we were looking for a couple of retracement candles. We didn't expect the market to come back up into structure at 109.40. We did have orders resting up here looking to get short, but in anticipation that the market wasn't going to come back up here, and the reason we didn't think that was down to fundamental reasons. We expected the move to continue, dollar weakness continue. So we were looking for price action trades, and we caught this move in here, which gave us a nice little return coming back down into structure. So we have now exited this market, but something we can watch out for is, are we going to break a structure, and are we going to continue this move down? And a lot will be dependent on where we see the down moving. We see this as not just a dollar move, but we're also seeing it as a risk off move. So what we've seen right now is the market come clean into structure. If we get a pullback into 108.95s, 109s, then fantastic. I'll be looking to get shorts. But again, I'm not sure we're going to see that deeper retracement. I think it might just be a shallow retracement. We may continue to see this move fall through, but our indicator for this will be seeing what happens over on the indexes. So we'll take a look at that in a moment, but buyers will probably have stepped in here, and the reason for this is a huge level here on the daily chart. There's not really going to be anything to trade right now. We were looking for, best way of describing it is the plunge protection team, stopping the market from dropping any further. At this point, when it came down here, it was about 440 points down on the day, which is a significant move. Obviously, we're currently 1% down at current price. So where could we see this market pull back up into? Probably around the 27,650 area. Comes up into 27,650. I'll be looking to see some correlating trades, whether that's with dollar yen, which will be maybe around the 109.40s, or even looking at gold. So what have we seen with gold? So gold, like the other safe haven on Japanese yen, you see how they've all come into these key structure areas, especially as the Dow, marking that off here, we've got the neckline in here, and you can see this candle through there. So we've seen that market come into around the 1477 to 1482 barrier, and now we're seeing just a little pause in momentum. However, I do expect this market to continue, keep pushing up towards 1490, and we'll look to trade the seasonal bullish move on this market, which could then see us up towards 1520 towards a year out. So as it stands, End of day traders, there's really no trading opportunities, but for the intraday traders, we'll be looking for a pullback. I think maybe around 1470, somewhere in this area here. All our trade signals will be going out live to our members and to those in the signal group. But yeah, we're currently, I think for this month, based on the trades we've sent out yesterday and today, about 3.5% up. So it's been a fantastic start to December, with it being a short month as well. We won't be trading actively from probably around the 16th, something like that. First 2 weeks we'll definitely be trading, and then we'll start to ease off until sort of the second week of New Year, second week of January. But we will be looking to hold some of these positions as we continue. So lovely trades we've had on gold. We've exited our longs, and we're looking for a pullback to continue this next move up. Next market that we've had a huge return on is Swissy. So the chart that you can see here with this stop and target, this was for end of day trades. So this was a position that had been left in for our end of day traders that we were discussing. You can see how the entry was taken, the false break to the upside, and then the markets come back down. And for some reason, all our lines have just started moving around, and we seem to be out of sync right now, because these two should be up here for some reason. So apologies guys if the lines are moving all over the charts. There we go, they should be a little bit higher, and because this was a broadening wedge pattern on a smaller time frame, and then what we've seen is we've seen the market break out. We did take some really nice profit out of this one. I closed yesterday a little bit early on this huge momentum candle, on the anticipation we might get a little bit of a pullback before it went again, which we did, and we managed to take advantage of that on a smaller time frame today. So next move is obviously it's critical to what happens on the Dow. So the Dow is going to keep retracing. I expect to see this market pull back a little bit, and we'll be looking for opportunities maybe from in and around the 99.10, 99.20 area. Look for a market pullback in. I'm not sure it'll come back that far, but if it does, fantastic. But I'll just be looking for nice solid price action to trade from, based on gradual retracement, and then if we can get somewhere into structure, fantastic, and if not, then I'll just be trading momentum using candlestick price action. That is it. Oh no, it's not. I want to just focus one last chart on cable, because this chart has potential to move quite a bit further. Obviously we are right now going through elections here in the UK, and there's potential for maybe some more volatility in this. But what we want to have a look at here is we've seen this big impulse movement up here, and then we've seen the market consolidate in this correction phase. Now we can see how it's formed this consolidation stroke channel, and then today's candle has effectively now pushed and tested and broken outside of the top of the channel. I just want to see where it closes before we make any assumptions of whether the market is going to continue moving up, or whether we're going to get another false break and we see a decline in this market before we can then look for that next impulse movement to the upside. So key is wait for this to define whether we're going to close above, or whether we're going to make a retracement back inside the channel and then decline back down towards support. So the question right now is, if we do actually break to the upside, where can we potentially go? Let me just remove these right now. So what I'll be looking for is confirmed close above, but then if we do break out, where can it potentially go to, and what sort of areas should we be focusing on? Well, initially we've got impulse into here, then we've got our next correction, which is this bit here, then we have an impulse again. Now usually what you'd find is this second impulse is usually the longest impulse of the next of the first three impulses. So I'd be looking at this move here, typical. I'll be looking at this move to repeat itself and potentially move into around that area, which is 134s. Now what we want to have a look at is, do we see any structure through this area? So just going to click through there and zoom back out, and you can see that 134s is the previous high of 2019. So are we going to basically pop through and retest 2019 highs? I see that as quite possible, really, especially if we see Conservatives get a majority vote. We will see a major boost on sterling, so watch out for pound longs, guys. But you just have to be a little bit more disciplined. Right now the money is a safe haven market. Watch the Swissy, watch the yen, watch gold and silver, and if you like trading the indexes, watch the Dow. Okay, that's it from us at Trade and Train. If you've enjoyed the video tonight, please hit like, share and subscribe. We look forward to posting more videos for you tomorrow. Good night.